Let's touch base with the management of Persistent Systems. Stock is in focus this morning. Dr. Anand Deshpande, founder and CMD Persistent Systems, joins us to discuss more about their earnings. Mr. Deshpande, it's good to have you on the show. Mix shift towards offshore led to a soft performance in services and digital business revenues, even as some new projects started which will drive long-term growth. What will be the near-term trend and the revenue hit from a short-term project closure?
During the quarter, the revenues were 835 crores and the profit was at 88.14 crores. And if you look at this in the context of the year and the half year, we find that we have reasonably good second half opportunities, specifically in the alliance business, where we are aligned to the calendar year with respect to one of our customers, and also the fact that we have some resale business. So it's a little hard to predict what the first half would mean as compared to the second half, while we do expect a second half to be better than the first one. In terms of specific accounts, we are seeing good activity in the market. We have seen some growth in existing accounts and also some new accounts that have come in. This particular short closure that we declared was sort of unexpected and unrelated. It was a one-off project that we were working with and for various reasons, including changes in the expectations from the customer and our team's ability to deliver on some of those. The project ended rather abruptly, which caused immediate dip in the revenue for the quarter, and also we had to undo a little bit from the previous quarter as well.
Right, there's quite a drop in sequential IBM Alliance revenues. What led to that? Any client-specific risk rebound seen in Q3?
Correct. So this particular foreclosure that we talked about, or short closure that we talked about, had nothing really to do with the IBM Alliance. The IBM Alliance business continues to be stable and should play out as was expected and planned. The challenges on all of these kinds of accounts is that you really don't know the exact numbers till the last day, but at the moment it does look fairly stable. There is nothing that we know that is going to create any downtrend on the IBM Alliance for the second half. In fact, the second half of the year for us and for our customer actually is usually pretty good in this area. So we'll have to just watch and see, but I do see good trends in terms of what we see in the pipeline.
What were the TCV deal wins, the conversions expected from the pipeline in coming quarters? How are deal sizes shaping up?
There are lots of questions here, but let me try to answer them one by one. We do see that the new deal closures, that is something that we track quite importantly, both in terms of pipeline and other things. Both the pipelines are pretty good right now. We have had pretty much the highest level of pipeline that we have seen in the last few quarters in this particular quarter as we begin into Q3. The second option also we see is that by and large customers are anxious to close business and get going, so they're not stalling anything. So that's another good reason why we believe that some of the things that we have in the pipeline will actually close. During the last quarter as well, during the second half, we announced a few partnerships and a few other acquisitions. So we acquired Herald Health, which is a healthcare company that is involved in building operational efficiency in the hospitals. That is going to give us some leads as well and some pipeline that was pending with them. And we announced another sort of a partnership with Partners Healthcare, where we are setting up Pivot Lab, which is an innovation lab for hospital and medical related stuff. So both of those should also start to give us long-term benefits in terms of our positioning, where we were sort of weak on the domain side but strong on the technology side. This gives us some domain capabilities of real good strength in the healthcare market, and we are seeing some good activity there as well. This quarter, some of the specific deal wins, actually there was some announced on the thing. I don't have the exact number of the TCV of what deals were won in that specific quarter, but I'll try to find out and send that to you.
Right. So your EBITDA margins inched up by about 40 bips, aided by the forex tailwind, which offset headwinds from wage hike and strong headcount addition as well. What's the range that we'll see you maintain, given the extent of the rupee depreciation when it comes to your margins?
So clearly we think that in the second half of the year we should be able to improve the margins. A lot of the margin depends on what the top line ends up as and the mix of the top line. some of the good trends that we have seen are, of course, the offshore mix going up improves margins in general. We have seen efficiencies in the utilization and other parts of the business, and overall, as well, the margins are better because of that. We also saw the rupee contributing to improved margins. So there are many factors that have taken into account, despite the about 8% offshore pay hike and also about 3% on-site pay hike that was rolled in this particular quarter. And there were some seasonalities in Europe also, which were headwinds in this particular project this quarter. But overall, the IP volatility. So there's a lot of complexity in how these numbers get reported. But by and large, we did have a slow quarter than what we had planned. But we do expect the second half to have definitely significant upside in terms of some of the projects that we know will happen in the second half of the year.
Right. So after the soft second quarter and first half dollar revenues of sub 5%, the street has, really scaled down your expectations to mid single digit growth from you over the next 1 year. What is it that you're aiming at, considering you're more optimistic for the second half?
No, so clearly we think we can do a lot better than that. As I said, a lot of it depends on some of the reseller business and the alliance business that we have and some of the pipeline that we have in place. And also last half for us last year was also not as strong as what it could be. So when you look at half over half next year, it should be a little better than what we had last year. I'm sort of hesitating to give you a specific number at this time because as it is, it's still early. There are a lot of variabilities at this time, and all I say is that we'll try to beat the numbers at the estimates that the analysts have given us.
Right. You have net cash of 1,340 crores on the balance sheet. How much will you be using it for buyback besides inorganic measures to prop up growth?
So I guess, both of these got discussed, and there are plans on, in terms of specifically on the acquisitions that we have and some of the things that we are discussing in the pipeline. And definitely some of this will get discussed further in the next board meeting, which is in January. And I don't really have a specific number to comment on how much of this will happen in buyback before the January meeting. But this is a point that will get considered in January meeting, depending on what the rest of the factors pan out during the next 3 months.
Okay, and hopefully they point upwards. Anand, good chatting with you. Thanks so much for taking the time out and speaking with us after your numbers. Not really seeing much of a recovery play up in the stock price, still down about 15% as we speak right now.